Hello investors and traders, today I'll speak about the stock market, S&P 500 and technical and fundamental analysis of the US indexes. So the S&P 500, let's start with it. We see that it's still traded at the levels of 4,000 as I see in my mind. It's here a correction, the first wave, the second, the third, the fourth and the fifth, so I'm expecting to see this index little bit lower. My target is here, this decreasing channel, so I expecting to see the fifth wave here in the lower border. In this case, I expect to see towards the end of this year S&P 500 lower around 50%. Still, we have the Fed fund rate increasing, the high inflation in the US and Europe, and also, of course, there is a lot of other problems with the bond market, but I'll speak about little bit later. The Nasdaq, the index of IT companies, also now traded at the levels around 12,000. So here I see support level 1100 and 10,090. So most probably we may see the Nasdaq at the pre-coronavirus crisis. So in this case, there is a potential to decreasement of 20% down. Let's have a look on the oil price. The Brent now is traded at the levels of 84. So here, as I see, it can be impulse here. So the first wave, the second, usually look, the third wave is the largest wave in the impulse, and if we have impulse, the correctional one, the second and the fourth, one of them can be flat and the second may be sharp. So here it's very sharp one, and here it looks like very flat. So after the correctional wave, I'm expecting to see the fifth wave. The fifth wave is usually higher than the third one, so in this case we may see the oil price much higher than $100 in the nearest future. The B2C, the Bitcoin price today is down down 5%, very volatile asset, very volatile instrument. So here still the performance at this year, since the beginning of the year, is 35%, so quite nice, it's quite impressive performance, but my target is still 30,000. Anyway, I continue to hold this asset in my portfolio, and I'm expecting to see this the B2C a little bit higher. The DXY, the index dollar, we see that now it's 105. Actually, I'm expecting, let's move to the monthly time frame. I'm expecting to see it's a little bit lower, lower than 100. My target is about 94, 93 in few years from now, but we'll see. I'm hope the DXY, the dollar, won't be traded higher. I remind you the highest level for the last 10 years it was 114. So anyway, I'm expecting to see the US dollar a little bit weaker in the near future. And the US Treasury bond is now its yield, the 10-year yield more than 4%. So of course it's a lot. It's very high yield, so it's also one of the reasons why we should invest in the stock market if we can invest in a safe asset without any risk and receive a dividend and receive a yield, early year yield of 4%. Let's have a look on this chart I prepared especially for you. So the first one, we see the 30-year fixed mortgage rate is now very close to 7% in the US. So yeah, it's really very high rate. We see it was lower than 5% the highest for the last year. It was, I guess, 7.2, 7.3, but now we are still see another spike in the US mortgage rate, so it's very hard for the US people, US citizens, to get a new mortgage. So it's another problem with the in the economy, in the housing sector, because 7% in the US dollar, I guess it's a lot. Let's have a look on the US government bond yield. So here, as I told previously, here we have an inverted yield curve. When the 2-year Treasury bond, its yield is higher than the 10-year Treasury bond. So when we see such picture, such points, it's signaling, it's a red flag, of course. It's signaling that the recession is very close, that most probably in the next 12 months we may see a recession. So it's started at 2022, and now we see this spread is just increasing. Of course, it's very bad sign for the equity market, for the stock market. Inverted yield curve is very, I remind you, it can be very dangerous. And another graph, especially for you. So we see the US stocks worst return by decades. So in the last century, it were only 5 decades when the real return was negative, and 3 times from this 5 periods it were a period of high inflation. So here was the high inflation, here and here another, it's the 2020s. Most probably we see a very high P ratio, and also very high inflation. Now I remind you, the inflation US is above 6%. Yeah, the last CPI data was 6.4%, and of course the last P ratio of S&P 500, it's around 16, no, it's 17, 18. So it's a lot, because the middle P ratio for, I guess, last 30 years, it's about 15. So we have a mix of high inflation and high valuation, high stock market valuation, and of course it's very hard time for the stock market to grow at all. So that's why I'm now, what I'm doing now, I can share with you my strategy. I'm buying bonds, the TLT, the US bond ETF on Treasury. Of course, it's also pay dividends around 3%, and I buy dividend stocks like Philip Morris, like AT&T, like WBA. If I won't see a price appreciation, but anyway, I at least will receive nice dividends, about 5%, 6%. So I hope to finish this year with with a positive performance. So it was my view on the stock market, on the bond market, on the US economy at general. So if you like this video, press the like button. Don't forget to subscribe to my channel, and see you on the next time.